and welcome to our weekly look ahead at the markets, and we're into the second half of the year. And the first half has been not short of eventful. We've seen a very strong run-up in global stock markets, first of all. That's been the standout story of the year so far, of the first half of the year. The Nasdaq enjoying its best 6-month period or half-year period in 40 years, up 30%. Japanese equities enjoying a very strong bounce as well, up around 27% or so for the Nikkei 225. That's to do with Bank of Japan staying loose, of course. It's also to do with much better corporate earnings, weaker yen, also changes to the corporate governance and capital efficiency moves by the authorities there. So lots happening in Japan, strong equity market, weak yen. We saw the yen breaking it to 145 against the dollar on Friday, and that is definitely something that the Bank of Japan and the Finance Ministry are watching. European equities have also enjoyed a good run up this year. We saw the DAX make an all-time high. It's up about 15%, similar sort of story for the CAC. The FTSE though, the laggard, it's pretty much flat for the year to date. That's after it enjoyed a very strong 2022 versus everyone else, which was weaker, so bear that in mind. And this rally that we've seen has really been driven by just a handful of big tech stocks in the US, the Magnificent Seven. Microsoft and Apple accounting for something like 14% of the S&P 500, just those two stocks alone. The S&P 493, absent the 7 stocks, the Magnificent Seven, is pretty much flat for the year. So a lot of stories going on under the hood. This week coming up though, we're looking at first of all the RBA, the Reserve Bank of Australia. It might pause. We've had a disinflation trend last week, the inflation number coming sharply down, I think from 6.8% to 5.6%. So sharp fall in inflation in Australia. That tees up potential pause. This is important because we're seeing a similar story with Canada, some softer inflation numbers, and the Bank of Canada and RBA have tended to lead the Fed somewhat. So looking to see what that implies for the Fed going forward. Last week we did hear some very hawkish words from the key central bankers in Sintra, the ECB's conference in Portugal. The ECB President Lagarde was sounding very hawkish. Jay Powell teeing up at least 2 more hikes. Andrew Bailey, I'm not quite sure what he said. He had some rather thick-looking eyebrows, but apart from that, I'm not quite sure what he said. Ueda teed up the possibility of normalising should inflation surprise to the upside. So all this central bank noise is sounding higher for longer. So this RBA decision, it'll be interesting to see what they say. Also coming up this week is the US jobs report. So on Friday, it's non-farm payrolls. That's the big one. Surprise to the upside last time, 339,000. Wage growth though just ticking a bit lower. Unemployment higher. We have seen weekly unemployment claims above 260,000 for 3 weeks on the bounce, but last week they came down a bit. We also had the US GDP number revised up to 2% from 1.4%. So lots going on under the hood here. The economy much more resilient, able to withstand these rate hikes, but the risk of a policy mistake now as we approach the end of the cycle is higher than ever. This is where it really counts, and this is where we think that potentially the Fed will go maybe a bit too far. But what it won't do is throw every last basis point at bringing core inflation down from, say, 3.5%, 4% down to 2%. It's going to have to admit that core inflation is going to be higher for longer as well. And that has implications, of course, for lots of other things. Also, keep an eye out on OPEC. They've got a conference in Vienna. It's not the OPEC plus production quota type meeting, but there'll be lots of chatter around that event. So eyes on the RBA and the US jobs report. And all the usual weekly numbers that we'll be keeping you posted about here. Thanks for watching.